All right, now, and so Tony, I was saying, keep yourself on mute so that you don't pop up on the screen during the recording. All right, so welcome everybody. We've already, done a few things to get us started, get your mind going. That was the whole purpose. We're gonna come back to it. I like it. I want you to do the same thing with this presentation. So today we have Ms. Lorena Hatch, who is the owner, founder, president, CEO of Hatch and Associates. She was born and raised in none other than New Orleans, Louisiana. Who that? She moved after Hurricane Katrina and Rita. She took them both, was like, I got to go. She is the proud mother of what she calls 5 kids, 4 children and a husband, but I'm gonna let y'all take it up with her later, okay? She's got a background in auditing and accounting, really working at the Dallas County Auditing Office, where she was, and she said, you know what? I can do this for myself, all right? I can make a difference in the lives of others, and I can give back while showing people how to make generational wealth, all right? And that's why we've chosen her to come here today, because she's really big on giving back. If you ask her where she stays, she said right down the street. Where you stay?
I'll be right down the street.
All right, she is. She with it. So all y'all in the suburbs, she's like, you can run and you can have an office and you can, do things right here in the center of where there sometimes is a greater need. So she started Hatch and Associates back in 2011, where she helps people with accounting, business, and personal taxes. And she's actually expanding and growing for doing strategic financial planning and procedures. So without further ado, I'm going to pass you over to your speaker for the evening, who's going to talk to you about understanding your numbers, Ms. Lorena Hatch.
Okay. First of all, I'm going to start off with one, thank you for giving me your time tonight and this opportunity to join you in your entrepreneurial journey. Because one thing you're going to learn in life, entrepreneurship is a team sport. So I appreciate you letting me be a part of your team at this point. Secondly, I want to congratulate you all CEOs. Okay. So getting used to calling yourself a CEO. I learned that in my Goldman Sachs program. We walked in the room, they said, welcome CEOs. So I'm going to say, welcome CEOs and congratulations to you for one, having the courage to start your own business, and 2, having the desire to grow your business and educate yourselves on how to run that business successfully, scale and grow it. So as she said, I am going to talk to you about knowing your numbers. First thing we're going to do is define accounting. What is the financial, learn the basic financial statement, and then we're going to talk about understanding your numbers. So when you hear the word accounting, tell me what you think of. Numbers. What else? Okay. Paperwork. Okay, so let me start off with telling you accounting. There are a lot of numbers in accounting, but the numbers are the last thing you worry about. Accounting is about the business. Is you sending us this presentation? Or
it'll be uploaded online. Right now.
Accounting is a systematic process of communicating your numbers. It tells people, it identifies, it helps you identify, measure, record, and communicate your information. It does it, it tells people what you have as business assets, what of those assets, how much of it you own and how much of it someone else has claims to. That's your liability. They have claims to that, not they own it. Your business owns it. And how much of that you own and how much they own. So the purpose of accounting, in my idea, okay, we're back it out. So it tells you how you're employing your resources, how you're using them. You know, you got cash, you got inventory, how are you using those? And it also tells you how the results. So what did the business have, what resources they have available to them, how they're being financed, and what are you accomplishing when you use your strategies in place. So let's start this way. The purpose of accounting. I'm a sports girl, so I like to think of things in a sports analogy. So to me, accounting is a scorecard. It tells you if your strategy is working. That is all your financial statements in your accounting tell you. When you started your business, you had a plan. I am going to start this bakery. I'm going to sell cakes, pies. I'm going to sell it to these people. I'm going to sell it for this much, and I'm going to make tons of money. We hope. So you come up with a strategic plan, a strategy. Your scorecard tells you, well, is that strategy working? How is your business performing? Are you accomplishing your goals? Or how are you performing based on what your vision is and what your competition is doing? Because in a sporting event, you always have competition. You always have competition. What adjustments need to be made? A lot. So you could be going along, you're looking at your scorecard, remember that's all it is, and you looking at, we've gone to the bakery, you got too much flour. I need to order less flour. You got, what adjustments do you need to make? I thought my target audience was here, but actually it's not, so I need to shift. What improvements need to be made? I need to buy better equipment. I need to not buy this equipment. And are you accomplishing your goals? Every year you should set a goal for yourself, for your business, for your strategy. Are you accomplishing those goals? That's what your financial reports are going to say. That is accounting in a nutshell. So I know everybody think about numbers, everything about profit and loss. I gotta grow this business and all of that. Counting the numbers are the last thing you think about, because the numbers tell the story. They sell, they sell. Jeremiah 33. The numbers are the last thing. When I tell people I'm an accountant, the first thing they say to me is, "Oh, you're great with numbers, girl. I got calculators, programs, and all that. What's the numbers for me?" I need to make sure that my processes are working. I need to make sure that my reports are saying what they're supposed to say, because you have a balance sheet. I got news for you. Your balance sheet could balance and everything be wrong, because you're not categorizing, you're not putting the numbers in the proper categories in the business. You're not maintaining that. The numbers are the numbers don't lie, but if you're not looking at your strategy, looking at your processes, and trying to figure out how to better those numbers, the numbers are, I know a lot of people stress the numbers, like bankers and all of those. They have a reason for their numbers, for wanting to see the numbers, but the numbers are the last thing you have to worry about. Your financial, your accounting programs, your accounting people will help you with the numbers. It's all about your strategy. Okay. So we talked about the basic financial statements. So what are the financial statements? They're a written record that convey the information from your day-to-day operations. At the end of the day, that's all your financial statements. They tell the story of what you have been doing in your business from day to day, month to month, year to year. The basic financial statements are the balance sheet, profit and loss statement. Those are the two statements you hear all the time. I'm gonna add one to you, or a curveball to you. Cash flow statement.
Oh, yeah.
Cash is king. Cash flow.
First of all, let me ask you a question. And this is an interactive presentation that y'all can hear. Who has a balance sheet for their business?
I know how to do it, but I don't have one.
Okay, so y'all have it. I'm like, shoot, I got a piece of chicken. All right. You have a profit and loss too? You're gonna go into these, right?
Yeah,
but I want to ask a question. What's the difference between a balance statement, a balance sheet, and a profit and loss statement?
Balance sheet just shows me, for that point in time, what my assets are, and equity. My profit and loss tell me what I've been doing during the month.
Talk to me about cash flow. What is that?
Now that's when I can actually take I haven't filled one of those out yet. That's why I came here. But I've got all the data to do it. It's just the form to show how I'm spending my cash.
All right.
That's what I want to know.
Anybody else got these?
I have the program, but I haven't used it yet.
So I'm gonna go back to the icebreaker that y'all love so much. Okay, remember me telling you, you just said, I got all the data, but I haven't put it in the sheet yet. Because you can have the numbers. That word problem gave you everything you needed. But if you don't know what goes where and what to use, and you can't think through it, it's not gonna matter. Does that make sense? Like she just said, you can have a balance sheet, it ain't balanced. You can have cash.
So
but
you
it
have
ain't flowing.
you can have a balance sheet that balance. That's the term of balance sheet. Assets equal liabilities plus owner's equity. That is your balance, that's your equation, that is your balance sheet. Debits and credits gotta be the same. And a tip will tell you guys, debits and credits mean one thing and one thing on the left side, right side. Because depending on what side you're looking at, debits can add, debits can subtract. So left side, right side. When you hear debit, credit, think left side, right side. Debit's your right, left side, credit's your right side. That's all they mean. It's not about the numbers. The numbers will work themselves out. It's about the process and putting the stuff in the proper category. So the numbers will tell the proper story. So when you
Yes, I
hear
understand.
accounting, don't get caught up on numbers. Accounting is nothing but business. At the end of the day, it just uses a lot of numbers. But at the end of the day, it's nothing but business. So, balance sheet, you had it, balance sheet and profit and loss, you were almost there. So. So you kind of take into a scorecard, let's talk about that balance sheet. The balance sheet displays total assets, how those assets are financed, either through debt or equity, liabilities, owner's equity. At the end of the day, that's all it is. It's an outlook of the assets. So here's an example of what I mean by how they finance. You have a vehicle that you purchased for your business. It's an asset to the company worth $30,000, but you finance that through a loan. So your business owns the car, but the bank has a claim if your business were to fail, they can take that car. And whatever, so let's say your loan balance on that car is $20,000. That leaves a $10,000 gap. That's owner's equity. Is your assets minus any claims that debtors may have, and then what's left, what they call residual or book value, is owner's equity. Or stockholders' equity, capital stock, however you want to call it, depends on how your business is structured, but they all mean the same. Owner's equity, stockholders' equity, member capital, same thing, different words. It's all about, as you said, the terminology.
Check on my people on Zoom, they got that?
Give me a thumbs up if you are okay on Zoom. Okay, I don't see. Okay, I got one thumbs up. Let's see, do we have any questions in the chat? If you have any questions, you can put them in the chat.
Just have to yell it out. 'Cause it's gonna be too-
Okay, just yell it out. So right now, let's do we have any questions on Zoom? You can call them out. Going, gone. Okay, so back to the balance sheet. You have assets. What are your assets? It's a list of everything that the company owns. Cash, fixed assets, land, building, equipment, fixed assets. Not inventory. Inventory, that's your next thing. That's the product that you use to make your product. So if you are a bakery, that's your flour, milk, sugar, eggs, that's inventory. Accounts receivable. Someone owes you money. That's all accounts receivable means. If you are a service company like me, I do a service, I invoice you, I have not collected that money. It goes there. It does not go into my cash till I collect it. Accounts receivable means someone owes you money. That's it. I made the revenue, I just haven't collected the cash flow. Okay. Prepaid expenses. You pay your insurance up for the year. You pay your insurance up in January, 12 months. 11 months of that is a prepaid expense. That's an asset to you. If you were to cancel your insurance in March, the insurance company owes you money. So, because you have not used up all 12 months of that insurance. So once a month, you're going to take down that prepaid by whatever your insurance premium is. Patent, goodwill, and copyrights. We all know what a patent and a goodwill is. I mean, patent and copyrights are. Goodwill is your brand, your reputation. We call these intangible assets because you cannot touch them, you cannot feel it. But they're assets to you. If you were to sell your company, you're selling your goodwill because they're buying not just your customer base, but they're buying your reputation as well.
Can you put your own value on that?
You can, but here's how value of things go. It's what they call fair market value. It's what somebody else is willing to pay for it. Yeah. So you can value your business at $1 million. But when the people who the valuers come in there and they said, no, it's only worth 500,000. They take out what you own in assets, goodwill is left. You know, so what we feel something is worth is not always what the market feels is worth. So. Then we go to liabilities. These are claims to your assets. So accounts payable. You owe somebody money. At the end of the day, that's all it is. You bought some inventory, you bought it from Sam's. It's not a credit card. Credit card is a liability, but this is different. If somebody invoices you and you haven't paid that invoice yet, you owe somebody money. That's all accounts payable means. These two are if you have employees, wages payable. You know, you go to work for a week, you don't get paid at the end of the week. Your employer just put wages payable on their books. They owe you that money. That is your claim to their assets. Then you have income tax. They withhold the income tax for your check and they send that to the IRS for you. Payroll taxes is their portion of your FICA. Sales tax. Here's where a lot of people I know get caught up is in sales tax. If you are a business that sells a product, you are to be collecting sales tax for the state and sending it to the state. You don't pay the sales tax, your customers can't pay sales tax. So when you sell that cake, you're supposed to be charging sales tax. You collect that sales tax, you record it in sales tax payable, and then once a month, once a quarter, once a year, you send that to the state. It's not income to you, it's not a lot, it's not an expense to you. But if you are not doing it, they will shut you down.
But I have services. I don't have to pay sales.
Some
tax, right?
services are taxable.
Really? Talk to me about it.
So if you have a lawn care business, that's taxable. Accounting services are not. So it is your responsibility, because the state will come in and let you know if you're a taxable service and you're not taxing, and they will shut you down. Common cleaners. Who all remembers common cleaners from Dallas?
Dude, I guess I get my clothes cleaned. I don't know.
Common cleaners did not pay their sales tax.
Yeah,
They are a service. Cleaning your clothes is a service. They were supposed to be, I believe they were charging the sales tax. They were collecting the sales tax. They were not paying the sales tax. The state sold their businesses to collect those sales tax. The state will show up at your business, sometimes with a padlock and a gun, shut you down, and because you did not pay sales tax. And once again, sales tax is not yours. It's not your liability. It's not, you are what they call a pass-through. You're collecting it from your customer for the state and sending it to the state. It's not, it has no effect on your bottom line whatsoever. You just have the responsibility. When you go to Walmart, Walmart collects your sales tax.
Yeah.
You know, when you, and they pay those sales tax to the state. 501c3 organizations we know are exempt. They're exempt from sales tax. You have to apply for that exemption. So make sure that you do that. You do not have to pay, you do not have to collect sales tax. You're exempt.
So I think I heard this right, that if you sell items online, you do have to charge the customer sales tax according to where your business is located,
Their
right?
state, their business,
Their
their state,
business.
where they are located. Because some states do not have sales tax.
Okay,
Some states, Texas don't have an income tax, but they do have sales tax and franchise tax. We'll talk about that later.
So just to add in, and it may clarify, I agree, there was a recent change that if you have an office in the place where you're basing that sale out of, if you have a principal office there, you do have to charge sales tax, even if you're shipping to a customer that may be somewhere else.
that's
Yeah.
right. That's right.
So, because sales tax, you gotta remember, sales tax is one of the ways the state makes its revenue. And the state's not like the IRS, where they can go out there and create liabilities and just let them grow, and they're not the government. The state relies on those tax incomes to run, to operate, because once again, the federal government and the states, they're businesses too. And if they're not making their revenues, they cannot run their state. Last tax, the last liability would be notes payable, lines of credit. So those are your car loans, bank loans, those things, line of credit. Credit cards are technically a line of credit, but it will fall under accounts payable. But once again, liabilities are basically people or businesses that have claims to your assets. What's left after all assets, after all claims have been made? Owner's equity. We have three types of owner's equity. You have the common stock, once again, remember, common stock, members capital, capital stock, whatever they call it, all the same thing, that's owner's equity. You have net income. That is the income that you earned that period. So you have net income for the year. That's what that is. Retained earnings is the net income that you did not withdraw from the business. So you retained that, you kept it in the business. It was retained by the business. Your income statement, also known as the profit and loss, is just a list of revenue and expenses. That's it. At the bottom, you get net income or net loss. That's all it is. How much money did I bring in? How much money did I spend out? This is the money I have left, net income. This is the money I don't have left, net loss. This is how much, this is how much I overspent. I got cash flow, but I don't have income.
Can you go into the cash flow, the difference between cash flow and income, or are you gonna do that later?
I got that coming up.
Got it.
So what's in your income statement? Gross sales. That's it. How much did I sell? Some places say about refunds and all of that, but sales is just that. How much did I sell? Gross sales. You have different categories of sales. In my business, I have accounting services, tax services, consulting services. You can name it, cakes, pies, cookies. They all go into gross income, gross sales. Cost of goods sold. These are the expenses that you use to make your product. This is how much did it cost for the flour? How much did it cost for the cake, for the sugar, egg? How much did I cost? Always build yourself into your services and products. That's the one thing we do not do as entrepreneurs.
Say that again?
Always build yourself. If you were working for a bakery and they paid you $20 an hour to bake that cake, they're going to put that in their cost of goods sold. We sometimes call COGS. A lot of us, when we own our businesses, we never think about paying ourselves.
Oh, y'all supposed to pay yourself first.
Well, but when you're looking at the numbers, when you're worrying about the bottom line numbers, you say, oh, I don't have enough money to pay myself. That's where that payable comes in. Because it needs to, especially when you go into banks and investors, they want to see that you put yourself in this business. When you're doing bids on contracts, some of us, I know we sell pies, cakes, cookies, whatever, you may get that big catering deal from that. And when you put that bid in, if you ain't put yourself in it, you just lost money. You have to put in a cost for you, because your time is valuable. Your time is money. You're confused, okay? That was your question.
If I were to do that, I'm not think about that. Simply because the way I build myself in is through my costing. When I cost out a product,
Mhm.
I account for the labor associated with doing it.
So you pay yourself.
Right.
If
Yeah,
you're
but I
accounting
don't put
for-
it in my cost of goods.
If it's a direct cost of you doing your product, it's a cost. The people that you pay to do, I know what you're thinking overhead costs. There is a salary and overhead cost. But
If, case in point, I buy a herb. So when I purchase that herb, of course, I'm gonna put in the shipping, because I put shipping, and I'm gonna put in the cost of that herb.
mhm,
Now, when I price that herb, I'm gonna put in whatever labor is associated with doing whatever it is I'm gonna do.
you just paid
to
yourself.
that herb. Yeah, but I don't put it in the cost of goods.
It needs to be there. Because it's a cost of putting together that product.
Am I
If you
getting-
didn't have, if you didn't have that product, would you have that labor cost?
But let me see, if I were to do what you're saying to do, my cost of goods would blow up, because if I make a batch of tea,
Mhm.
okay, Now, I've made a lot of teas. So if I were to itemize all of that and put it into my cost of goods, it would just be, I think it would skew my numbers so bad. I capture that another way. I'm doing this thing. What I'm concerned with, what did it take me to get that product and to put that product in production?
Okay, that's a strategy planning
Yeah,
question.
and then I capture,
That's a strategy planning question, because then that sounds, what you need to do is start allocating your costs.
Right.
Allocating your labor cost, but it's a cost. If the cost of developing that product is cost, is direct, because if you did not have this product, you wouldn't have those costs. You wouldn't have a labor cost if you did not do that tea. So that labor cost is a direct, what I call direct cost for building your product.
Let me give you an example. And then I think it's good to give us, especially with so few of us and a couple of us on Zoom, we're not leaving y'all out. We want you to give us your examples. Like, I think anything you mentioned, let's talk to them. Let's get it right, because this is how we get to the nitty gritty. You guys have all heard of Big Pharma, right? Okay, so Big Pharma comes out with a new pill. That pill costs a whole bunch of money. It ain't costing that much to make that pill. So why is it that all of a sudden, 10 years later, it goes generic and the price is like $2, but you've been charging me $2,000 all this other time? You know why? They rolled their labor, their research, their development, their time and effort into the cost of those goods.
and
So now, go ahead.
I just think I'm gonna capture what I do,
Mm-hmm.
because otherwise I can't say it. When I do my income statement, if I were to, I done did 30 days of production. I mean, we do a lot of teas, sours, butters, boom, 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 boom.
Mhm.
If I were to take all of those days and to me, cost of goods is telling me what it is that I purchased. What did it cost me to get those cost of goods? I'll capture all my costs when I price. Now, I think we're doing apples and oranges. I may be wrong. You're more of an accountant, obviously, than I am. But to me, when I see cost of goods, I want to make sure that whatever I purchase, I understand what it costs. Because when I go to price, I have to make sure that that cost is captured.
But your labor cost is a cost of purchase still, because you have to pay someone to make that product. And you have to pay yourself to make
But I
that bill.
capture that when I do when I price my.
When you make it sale price.
Well, when I have a cost structure, when I put a price on a product,
Mhm.
included in that cost structure is the labor it took to make that product. So I'm not putting that as my cost of good. I'm putting that as my cost of doing business, but not as my cost of goods sold.
So let me ask you this, if you didn't have to make that product, would that labor cost be so high?
Then it would be a different. Then you're talking about a whole different business setup.
So what we're talking about is the cost to make that product.
Right.
And a part of that cost to make that product is you developing that tea.
Right.
So that is a cost to make it, that is a cost of goods sold. Because if you weren't making that tea and your wife, and you had an employee making that tea.
Okay.
Cause it's included in the
I'm
cost.
gonna say it
whole
like
product.
this. I respect what you're saying. That isn't how I choose to capture my costs. I don't want to capture my labor and my pricing. I don't capture my
Well, see,
cost of
in
goods.
order to know what price to sell, let's say,
Exactly.
you need to have all of your costs, and that reflects the cost of goods sold.
Okay, I'm not, because, yeah, we're gonna.
Now, I will tell you,
Yeah,
let me say this, hold on. So we're here to be able to help.
Mhm.
Okay, so you got some people in here who run very successful businesses. The gentleman that left, I won't tell his business, but very successful. And he flat out said, this is how you do it, okay? We all agree with her. Now, I get it, but there's an opportunity to shortchange yourself here. So we don't want you to miss that. So maybe we
Yeah,
can revisit that.
and I'm not gonna argue. the point.
I think we're
Just-
talking the
just
same
like-
thing, it's just the way you're
Yeah,
visioning it is
and-
different, that's it. Because you're
Yeah.
capturing your labor cost,
Right.
but you need to show it in cost. At the end of the day, that's what it is.
And you gotta, and certain institutions are gonna ask about certain things. What is your income here? And if you got it going off and it looks like it's just an expense and you didn't account for it, then they can say, hey, there's a discrepancy here. So again, we'll talk about it, it's apples and oranges, but continue, but I wanna know more about, because there may be other things that they're doing
Yeah.
that we need to find out about, so please, allow, y'all speak up.
Okay, so that just said we started with
You too,
gross
go on.
income. We started with gross income, COGS. From that, you get gross profit, operating profit. With gross profit, that's at the end of the day. Then from there, you have your operating costs. The operating costs are things like rent, utilities, things that you will have if you sold no product, you still would have rent. So if you didn't sell any product, you wouldn't have cost of goods sold. But if you don't, you still have your rent, you still have your operating costs, you still have overhead salaries. That's your secretary, yourself, once again, yourself, because you do spend time outside, not just making your products. You go out there and do marketing, sales, marketing is an operating expense as well. So.
But I cook in my house with my electricity, it don't cost me nothing extra, I gotta pay mortgage
Yes, you
anyway,
do.
right?
Yes, you do. You gotta.
But
figure out-
I can write that, I mean, that counts, cause
Yeah.
I mean, I gotta pay
You can
mortgage
write,
anyway.
if you work out your home, you can allocate a portion of your mortgage and rent and utilities and telephone as a business expense. If you meet clients at your home and you pay somebody to cut your grass, you can use that too. Cause that's your office. So it's about being strategic.
It's a new strategy.
It's that's what all accounting is.
It's not new, it might be new to certain people, okay, but literally, they'll take you for the square footage that you use to entertain your people. If it's a TV, a computer, a fax number, a phone line, anything that's dedicated business use,
You deduct that. That's a business expense, which is why you need to make sure you're structured properly. If you're a sole prop, you can't take it. If you're an LLC, C Corp, S Corp, all these business expenses count. You can, if you're a sole proprietor and a sole member LLC that's not taxed properly, you can't pay yourself. You can't deduct the money you pay yourself. So you have to make sure your structures are proper. This is why you need professionals helping you with your books. We'll talk about that. From operating expenses, money left, net income or loss. So that leads us to this cash flow statement. I'm gonna say this and I pray everyone hear me.
hold on, before you go to cash flow, I'm sorry. So we only had this gentleman and this young lady who had the first two things. Y'all don't have those, what she just got through talking about, right?
My business is being on and off because I started mine during the pandemic.
You still
So
should
I
have,
haven't
you still should have them.
Yeah.
So how do you, so maybe we can ask you guys, how did y'all get started to get where you are with your statements? Because I think these two young ladies may need to know where to start. So what did you use first? Because sometimes I'll tell the truth, what I started with, I couldn't do it. It was, you can have the software, but if you don't know how to run with the software, it does no good for you. And I'll give you a little bit of background with my experience afterwards, because I don't want to tank anything. Remember, I'm here to facilitate conversations, so I'm gonna poke the bear. But talk to me. Tell us about how you got to the point to where you're comfortable with the first two documents or that we mentioned.
I took a little bit of that, obviously, in school, but I just work as I do now with spreadsheets, but I struggled doing it. I struggled doing it. I had to, at first, I remember when I did it, I had it allocated all twisted up.
Okay.
And then I had somebody come in, I got this, who was that group that came in and said, from that school? I had a group of college students come in.
UTD?
Was that it?
Yeah.
Yeah, they came in and they did an overview and they sat and explained, I showed them what I was doing.
That's a
They
very
showed
good
me-
program.
Yeah. they took
Once you
me
get your business
So
started.
they showed you what you were doing, and what happened?
Well, they showed me what I was doing. They showed me some of the issues I was facing and whatnot and what I needed to do. So I kind of picked it up from there. When they left, I just expanded on it because I realized, like she was telling me, that I couldn't tell what was going on. So when COVID hit, I did a forensic review and just tore everything up and just took a look at it.
And so you're still doing it from a spreadsheet, or you're not using the software?
I'm going to go to QuickBooks, but I have to get this chart of accounts together before I even twist around with that. So they got a school or something. There's a program or something that they're telling us we can go to understand QuickBooks, but I'm going to have to get somebody to set that up for me because the way my systems are integrated, I'm doing too much work in the morning, balancing out. So I want a system that'll
Oh, I love having him, because he's talking about slides I have down the line.
But if you don't, notice this one thing, with everything is all convoluted, and you know what I'm saying? But no, that's exactly, that's why I asked you about the spreadsheet.
Mhm.
So I'll give you the background. I told you guys I was a pharmacist. What I didn't tell you is I used to be a district manager of operations for Walgreens, all over North Texas, East Texas, several different places, 72 different locations. I would walk into a person who's running a multi-million-dollar operation here, didn't know anything about numbers. And I have to explain to them how to do, you know what I'm saying, these income statements, how to do, and you know, Walgreens runs it for you, your profit and loss. Because all I know is they at the register selling prescriptions all day. That's what they thinking, it's coming in, but I got to pay you. I gotta pay for these labels, I got to pay these lights, all those kind of things people don't understand. So that's why I'm really big on saying, it can sound good that you got this, but it's trash in, trash out. You guys have heard that before. Honestly speaking, we were talking about the calculator. You weren't here then, I don't think. And I said in pharmacy school, they wouldn't let us use a calculator because you never knew if you were wrong. Same thing with spreadsheet. As long as you got a formula in there, you can have the wrong number all the way down and you just keep copying it every month. And if it's a mistake way back when, but some of these softwares will catch it, but you still got to understand the why. It's got to make sense to you. So I would tell you guys, I would not recommend starting off with a spreadsheet. No disrespect to him, but think about all the things he said he had to go through. But even if you decide to go with something like a QuickBooks, which is actually a pretty expensive solution, you still got to make sure stuff is going in the right places. Because QuickBooks is going to do what you allow it to do. Does that make sense? So it's important to know these terms and know when I say stuff ain't balanced, I don't mean the numbers don't match. I mean it ain't right.
But can I add something to that? The thing that I got out of this was that it is so important to do it yourself and make those mistakes, because having done that, I now know when something is off simply because I'm in it. And you get somebody to review it, make sure you're doing right. But when you're doing it yourself, before I would trade off to a company like QuickBooks, because even when you go to QuickBooks, you got to tell them how your system works. So I think it's slick to make mistakes.
The mistakes are costly. So
I know they are.
I agree, I hear what you're saying.
Yeah,
and it may just
y'all.
be
He
for
said he
me.
knows spreadsheets, because he said he knew spreadsheets.
Yeah,
Everybody
I know,
knows
but I'm
spreadsheets.
good at spreadsheets, so.
But and I hear what you're saying, and
But I
I
agree.
agree with you in a way, because here's the thing I would say you would bring a professional in and help you with that, because your professional could teach you what you learned,
You're right.
and that
You're
costs
right.
you a lot of money. It costs time is money, and mistakes are costly.
You're right.
You were lucky enough, and a lot of people do not qualify for that program that you went to, or they don't know about that program. So they were hiring me.
Right.
I cost a
You're absolutely
lot of
right.
money
You're absolutely
when
right.
you make mistakes, and I gotta come in there and clean it up. My hourly rate for consultation is $150 an hour. And that's me going into your books going, okay, this is wrong. I gotta go through each transaction. Whereas if you hired me in the beginning.
You're absolutely right, but
So I hear what you're saying.
No,
I
but
agree.
you
You
were
gotta know
talking
what
to
that
them.
person is doing.
No, but you're telling them, teaching them as you do
You
that.
gotta know what that person is doing, because fraud is real. We'll talk about that.
But you're absolutely right.
I'm gonna say one thing on that point, we're gonna keep going. And I tell this to everybody. I have clients all over. And I say, some of y'all, when it comes to filing your taxes, you will go to your homegirl who you went to high school with, that used to cheat off your paper. And now she talking about she doing taxes. Tell me what sense that makes. You have to be willing to learn enough to know that something ain't right. Does that make sense? And so that's what he learned, the hard way, was that something ain't right. But if you just gonna shy away from the brain problems I was giving y'all, you gotta at least go back and say, you know what? It sounds like a lot, but let me go with what I do know. I know there are 5 pennies in a nickel. You see what I'm saying? I know there are so many, nickels in a dime. You can't just say, I don't get this. Break it down into pieces and figure it out.
Yeah, so you go to somebody and you walk into their office and they say, how much I want to give you, how much you want me to get, how much you want to get back? Pick your stuff up and leave. They're about to commit fraud. They are. And you know who pays for fraud? You do, not the taxpayer.
No.
You're about to do that jail time and you're about to pay all those costs. They may slap a fine on them and keep it pushing. They still gonna be doing taxes while you're sitting behind bars. Report, so you statement of cash flow report, cash generated and spent. That is the whole purpose. So, like I was saying earlier, I'm gonna say this and please hear me. Profits do not equal cash flow. Cash flow do not equal profits. I had a client just recently asked me, she's got lots of money in the bank. Last year she had a loss. She asked me, how did I have a loss when I have all this money in the bank. You have cash flow. Your balance sheet, think of it like this, it's a video. It tells what your business done from the day you started it. So if you started it January 1, and you go through the day, your balance sheet is reflecting all of that information that you did from January 1 through today. It's a video. Let's look at the, like I said, I told y'all I'm a sports girl, I'm from that, I'm from the Nation.
Who there?
So when we look at the Saints from the day they say they started in 1950 through today, we're looking at their record for the whole time that enterprise has been in business. They are 100 and whatever to 150 to and 5. I know that ain't true, but hey, that's my Steve. So, so that's how, but when you look at the profit and loss statement, it's a picture. Is what you did that period, what you did that month, that quarter, that week, that year. And everything from the profit and loss statement rolls into the balance sheet. That makes it, that's why it's a video. It tells what the activity that your business has done over time. So when she's looking at her balance sheet and she's seeing $1 million in cash, she's seeing all the cash she generated from the day she started her business. That's cash flow. But when you look at your profit and loss statement, it tells what you did that month, that year, that quarter, however date you put that on in that report. So do not confuse profits and cash flows. That's different. And because here's the thing, when you think about profits and cash flow, remember we talked about when you're invoicing. I invoice a client for $5,000. They don't pay me for 30 days. I made $5,000 in revenue, but I did not collect that cash. Where is it sitting? You owe me money. So until I collect that cash, that money is just sitting in accounts receivable. I have the revenue, but I don't have that cash. So profits do not equal cash flow. Always remember that. So it's a specific period of time. It bridges the gap between the balance sheet, profit and loss statement. It bridges that gap. So it breaks this into 3 categories. You have operating activities. These are the money you receive from doing everyday business. This is where you want your operating cash to come from. If your operating cash is strong, if this number is positive and strong on your cash flow statement, you have a strong business. If your business can pay for all its expenses from its operations, you have solid cash flows and your business is doing well. If you have investing activities, that is people, you went out and got invested, you're on Shark Tank. By the way, don't watch that shit, it's garbage. But you're on Shark Tank and you get money from one of the sharks. That's an investment activity. If you purchase or sell equipment or a fixed asset, that's an investing activity. So if you get an influx of cash from an investor, that didn't come from operations. That's somebody who pumped money into your business to breathe life. You want to do this and the financing activity, which is loans and other debt. You want to do this to expand your business, not operate your business. You want your operating cash to come from operating activities, financing and investing activities. This is to grow and expand your business. You have a big contract coming in and you need to buy new equipment. You need to buy a bunch of inventory. That's when you go to your investors because your business is growing. It's growing past what you are capable of in operation. But that cannot be the main source of your money. So are there any questions on the basic financial statements?
I got some homework.
Oh, you got homework, yeah, I got that right.
Everybody got it. Oh,
So we talked about what is accounting, but there are a lot of what they call financial service professionals out there. So what are the difference in them? What are you getting when you hire these different professionals? You have bookkeepers. Bookkeepers are data entry people mostly. You have some great bookkeepers out there. Good bookkeepers that'll prepare your financial statements for you. Some of them have been in business long enough that they could probably analyze financial statements as well. But a lot of bookkeepers mainly maintain your QuickBooks for you, pump out a report for you every now and again. In the state of Texas, unfortunately, if you do not have a CPA's license, even though you're an accountant, you cannot say you're an accountant. So they may say they're a bookkeeper. So you may be getting an accountant who's calling themselves a bookkeeper because of a state law. But you want to be careful who you hire. You want to make sure that, one, anybody you hire to do work in your business, make sure they're a good fit for your business. I think of myself, hey, I'm the best badass bookkeeper accountant, whatever you want to call me out there, but I may not be right for your business. One, I work with certain industries. I do not do restaurants because I don't want to deal with the inventory. I do not do oil and gas. I'm not qualified. So you want to make sure that whoever you hire to do your bookkeeping or accounting and CPAs, you want to make sure that they not only are qualified, because I've met some stupid CPAs. Not only are they qualified, but they are a right fit for you and your business. Because see how we just went back and forth with that cost of goods? Imagine you have somebody like, I'm right, you're wrong. That's it. You don't know what you're talking about. I went to school all this time. You don't want that.
Right.
You do not want that at all. So you want to make sure whoever you hire not only is qualified to know what your business does, but they are a good fit for you and your company. They understand your journey, where you want to go, and they can help you get there. That is my role. My role in your business is to find out what your goals are and help you get there. Take the stress of this beast off of you so you can go out there and run your business and make your money.
So question, so mine won't really start until this year, because I'm getting my 501c3 this year.
Mhm.
I haven't utilized my LLC until this year, and then I haven't used my lost kids until this year. So this year I'll have to start tracking.
Mhm.
Okay.
And you can hire, there's somebody like me who has, remember I told you I work with nonprofits. I grow nonprofits. At the end of the day, I grow nonprofits. But everybody, I understand too, accounting is expensive. But there are people out there that work with startups and they have packages. Like I have a special package for certain revenue levels to help. Now, granted, you're gonna be doing a lot of work yourself, but I will be there to help you along the way. Because, like I said, I'm expensive. For a reason, I know my worth. Know your worth. No one to tell you how much you are, how much you're worth. Do not let nobody tell you what your price is, including friends and family, especially friends and family. Your fee is your fee, and that's it. They don't want to pay it, tell them to go somewhere else. Get a tax professional, tax planners. Like she was saying, you got your home girl who do taxes on the side. H&R Block, bunch of people who do taxes. H&R Block showed them how to put input numbers into a program. That's all they do. They are not tax professionals. They're not tax planners. One key way you can find out you got a tax professional and somebody who do taxes, April 15th, they roll up the sidewalk, lights turn off, you can't find them no more. They're a person that do taxes. A tax professional and a tax planner knows that one, tax season is January through December. You're always in tax season. It is not just January through April when you are prepared. That's tax preparation season. You need to be planning taxes all year long. You need to be knowing what expenses you can deduct. Meals. Meals are a deduct. You go out on a business dinner, you go out with somebody, you and your wife, go out to dinner and talk business. It's deductible.
Yeah, we do.
And how much is that deductible now? And did it change during the pandemic?
It's a percentage.
It's a percentage. It really depends on, I think it's up to 80% now.
100.
Oh, they moved it up to 100?
100 during the pandemic.
Miles. If you leave your home to go to a customer, track those mileage. There's an app called Mile IQ. You tell it where you're going, they put the miles in and you can swipe. Business, personal. Miles IQ. And there's others. Miles IQ is the one I know it's free to begin with, and people use it a lot, they like it. But there are apps out there that will track your mileage for you. Mileage cost just went up to 58 cents, 58.5 cents a mile. So any business mile you travel, you go out of town to a conference, a tax planner will tell you how your vacation can be a business deduction. You can go on vacation with your family and your costs are deductible. You just gotta know how to do it. I'm gonna date myself here. I just saw a story, because we were just talking about how much your meals are. Kyle, I like Living Single. My husband drives, I drive my husband nuts because every time Living Single is on, I'm watching it marathon. There's a show where Kyle goes out and he buys dinner for his friends. And they were like, well, he said, I got an expense account now. And as long as his business is deductible. So he gives everybody the food. He says, so does everybody have money in the bank somewhere? He said, yeah, good, keep it there. Dinner with prospective clients. Boom, it's deductible. You talk business, you go to a happy hour and do drinks. As long as you talk business, it's deductible on your business. But once again, you gotta be properly structured. If you're not the proper business structure, you cannot deduct these things. We talked about your mortgage and your square footage.
And it's
And your home.
cash.
Keep the receipts.
You know, but I mean, I'm still spending the money.
And also, when it comes to doing your taxes, it's not about what's true, it's about what you can prove. If you cannot prove that business deduction, the IRS will disallow it and put it back into and take it off your tax return. So make sure you have your receipts and your documentation. You gotta be able to document this stuff. You could be telling the truth all day long, but if you can't prove that documentation, boom, they're gonna take it off. Financial planners and wealth management. So I am an accountant, but you have financial planners and wealth managers. Everyone should have one of these as well. We're not gonna work forever. And when you start your second life, you still gotta fund it. And if you do not have the proper planning in place today, you will not be able to afford it. You will not be able to afford retirement. So you have to plan for that today. So get a good financial planner, a good budget. Everyone should have one of these. You should have a mentor, you should have a business coach. I had someone tell me you need a mirror and a pillow. That business coach, there's a difference between a business coach and a business consultant. But that business coach is that person that's gonna listen to your ideas and tell you, but I don't think that's gonna work. I think it is. A business mentor is somebody whose business is looking the way you want it to look, and you can ask them to help you guide you.
So who has any of those? Go back a slide for me. Who has a bookkeeper? Anybody online?
I'm a book.
Anybody? What they say?
I don't see any hands raised or anything. No one's talking. Okay, no, I see no. I suggest, if you don't have one, I understand the cost. I have a pricing package that's a flash fee once a year that gets your tax returns done and a quarterly meeting with me to go over your financials. If you want me to help you generate those financials, there's an extra cost for that. And it's very affordable. I purposely tailored this for businesses like yours who are trying to grow and scale.
So what businesses do you
I work with nonprofits. I work with construction. I work with, one of my nonprofits is a construction. I work with truckers. I will work with cleaners, like janitorial service companies. I have worked with doctors, attorneys. What is your business?
Retail.
Retail. The main thing I don't like about retail is inventory. I hate inventory. When I was
Tell
doing,
me about it.
when I was doing those audits, that inventory count, oh no, when I passed that, yay. No, I don't like doing inventory. Inventory is you can audit inventory by yourself. And I can tell you some fraud stories on inventory. I have a story, if you know me long enough, you know I have a story for everything.
Hold on, before you go on. All right, so let me just throw this in. You've heard, don't drink and drive, catch Uber. You know how many times people drank and drove? And then next morning you woke up and was like, man, how did I get home? I ain't never doing that again. Next weekend, what happened?
You do the same thing.
It's only a matter of time before something happens. That's the same thing it is about you playing with your own money without getting a bookkeeper or a CPA or somebody else. It's only a matter of time before you get caught up.
It's a fresh shut
So my question becomes, which one is cheaper? Uber or DWI? Look at that in terms of your business.
I hired an accountant.
No, we ain't giving out no names,
Yeah,
we're
yeah,
recording,
yeah.
we're recording.
But anyway, I hired an accountant and she used this software. And what I didn't like was that because of the idiosyncrasies of the business, I couldn't get a end of the month statement because she couldn't recognize what I was sending over.
Mm-hmm.
So she was tied into the bank to see what was going on to the bank. But you know, like if I use gas, I may use my card outside of the computer.
Mhm.
And we just couldn't reconcile. I couldn't
So
reconcile.
once again, that's why I say when you, make sure you interview. Cause like you said, you work in retail, I may know somebody that can help you. But I don't know what her fee is, I don't know what her fee structure is. That's why you have to pick that person that works well for your business. Cause don't get me wrong, like I said, I know some stupid CPAs, but CPAs are geniuses. Only problem is, only that left side of that brain work. So if you're getting creative and doing things, we're not creative people. This is what it says, you know, I tell my daughter all the time, she's like, mommy, that side of my brain don't work. I'm not a creative person. And I had somebody come to my office one day and tell me, I knew he was gonna tell me something I was not gonna agree with. When he sat down, he said, I need me a crooked account.
No.
You need to leave now.
Yeah, that's
I
right.
know that's right.
So you know, so you have to make sure that the people that you're bringing into your business, especially anybody that's dealing with your financial information, knows your business, understands your business, understands the things that you can do, like when you using your personal card for business expenses, which is a big no-no, or using your business card for personal expenses. Don't cut that out too. How to account for stuff like that. So you just gotta find that person. And what I like to do, what I say when especially when I'm hiring people, I hire for the personality, the character traits I'm looking for. I need somebody that's a go-getter, because you can teach the skills. If they are teachable, you can teach them what you need, but you need that person that's gonna fit well within your organization. So that's how I hire. And the same thing when you get a bookkeeper, accountant, attorney, business coach, you're hiring somebody to be a part of your team. Remember, we're talking, entrepreneurship is a team sport. So you're hiring people to be a part of your team. You gotta make sure they fit in your team. And when you're hiring a business coach, you wanna find somebody that's gonna challenge you, not just be a yes man.
Right.
Because you're not gonna grow unless you're challenged. So my most successful clients do all of these things. Some of these things, they're working on these things, all of that. So first thing, keep business and personal separate. If you are an LLC, if you're not an LLC, get that LLC immediately, or a corporation, whatever how you wanna structure your business. Talk to an accountant and a lawyer to find out what's the best business structure for you. And you do not have a business account, when you wake up tomorrow, go get your business account. Because that's how you track your business expenses. And then you want to keep your business and personal separate, because if, God forbid, someone were to sue your retail business and you go into court and the judge says, well, look, I can't tell where the business stopped and you begin. So we're gonna dismantle your LLC and they can sue you personally now.
So what I do, I just keep my business on my name federal. I had just started, so you can't go in there and say you want a business account. You have to wait. So do I go to somebody else or
Is it in your business name?
no? Because they don't let you start off like that. You have to get in.
You need a business account in your business name, because now that looks personal. It's about, remember I said, it's not about when it comes to the IRS, it's not about what you say all the time, and it can be true. It's about what you can prove. And the same thing goes to court. This looks like a personal account that you're running business through. It's not, and then you gotta remember also, your business is not you. It's, you may be the face of your business, but your business is its own entity all by itself.
Correct. So that mean I have to get 3 accounts, correct?
Why would you just change the one that you're using as the business into a real
Yeah, I
business?
have to wait 1 more month to do that.
That's only a month you've been doing it all.
Yeah.
But I'll say you can simply start off with DBA, then LLC.
Yeah, I have
something.
a DBA for my lost kids, and I have an LLC, and then I'm working on my 501c3 that's supposed to be coming in a few weeks.
I just don't know why you got this, but maybe it's a Navy Federal thing. We can talk afterwards, but
Yeah.
you don't want, it looks like it's you. Well, you can say you using it for F, Y, and Z, but it's you. And once you make a certain amount of money, that ain't gonna hold no.
Nope.
So we'll keep going.
Stay on top of invoicing. If you're a person that invoices, if one day you may have a big contract and say you cater, bake cookies, and then someone say, hey, I have this event going on and I want 1,000 cookies. You're gonna invoice them and you're gonna collect half of that up front. Stay on top of that invoicing. When you provide that product, when you provide that service, it go home and invoice. If you wait 30 days to invoice me for something that you know, I'm gonna forget you did it. And they ain't gonna wanna pay you. So now it's like, girl, you had, you know, so, and then it's cash, once again, that's cash flow.
Mhm.
That's cash flow. You need that, like when I say you're gonna invoice them for half your thing, you need that cash to buy the supplies to make the product. So stay on top of your invoice. I'm gonna do it next week. I'm gonna do it tomorrow. You know, doing it tomorrow is like me and daddy, tomorrow never comes.
I know we got to keep going, we about out of time, but I'm gonna tell you something. So I tell all my clients, you have days of the week that you do certain things. And so literally every Monday, we call it Money Mondays,
I call it marketing.
okay?
I call it management
I
Mondays.
call it Money Mondays, because you need to go back and look at what you did last week. So if you lost money or somebody ain't pay you, you don't need to be going through the same week all week without collecting your money. You know what I'm saying? You need to make them amendments right there. So I tell everybody, Money Mondays, if that's the day you need to do all your invoices, do all your invoices. If you got some time on the weekend, go and get started. But don't go through that week and you still got folks who owe you, because you the one paying the interest. You the one being hindered because of that. They over there chilling. And the longer you give people, the more likely they are to spend their money on something else.
Yeah. And if somebody takes more than 30 days to pay you, you need to get on them. You need to get that collection on. Prepare and monitor an annual budget. Budget is another form of ghetto spending, and if budget bothers you, spending plan. You need to do this. Because this is, you set goals. You need to know if you're accomplishing those goals. Budgets tell you that. I'm only gonna spend this much, and throughout the year, you start looking at, okay, I'm getting close to spending what I had spent on my teas. That means I'm spending too much money here. I may need to find a new supplier, or you may not be charging enough. I hear people all the time telling me, oh, I need to get more customers, get more customers. If you're having a problem keeping up with the customers you have, what is more customers gonna do? It's gonna water down your service, which means the customers that you got are not happy. Maybe you just need to increase your fee by 5%. And if people really value your service, that 5% ain't gonna mean nothing. So you
I
gotta
want
look
you
at
to
the
keep
strategy.
that, I want you to keep that thought in mind when we talk afterwards. Keep that thought in mind.
Have strong policies, processes, and procedures. Anybody that scales has these. Policies and procedures, especially accounting policies, procedures, help you protect you from fraud. They establish internal controls. Processes, you already have them, write them down. So that when you hire someone else to come in and do your work for you, they don't get the same outcome because they followed your process. They didn't make it up as they went along. You don't have these, that gives them time, freedom to get creative and make things up. Reconcile your accounts monthly. Bank accounts, credit card accounts, reconcile them monthly, because someone could be stealing from you, whether it's in your business or at the bank. You need to do that. Oh, outside the bank too, because fraud happens everywhere. Review your financials monthly. Minimum quarter, monthly. Reviewing them in December, January information means nothing to you in December. You need to have an ongoing process throughout the year. Your CEOs, this is what CEOs do. Manage accounts payable and receivable. Don't take too long to pay your bills, that's your credit. Don't take too long to let people pay you. Because I tell you, once somebody hits outside of 30 days, it's gonna be damn near impossible to get your money from them. Some people will pay you, be like, oh, I'm so sorry, I forgot. See, once they hit 60, you better have a guard dog out there.
You don't want your money.
Keep track of your expenses. And it's not relying on the bank to keep track of your expenses. You keep track of your expenses, because banks make mistakes too. Tax planning, we talked about that. That's all year long. You start looking up and your revenues are getting high. You want to talk to a tax planner about how you can lower taxable income, because it's not about how much gross income you make, it's about taxable income. And smart people, smart businesses will look at their taxable income, figure out how much that income tax is, and figure out a way to put it in their fee so your customers paying the taxes and not you.
Like that.
Outsource your accounting, always, outsource. As many services that you are not proficient at, outsource those. So the benefit, it saves you time. I heard you say earlier, I spend so much time in the morning trying to take care of my accounting.
When all this.
So it helps you with analysis. Do I owe money? Does anybody owe me? Am I losing money? All of these numbers are in your financial statements, and a lot of y'all don't know how to look at that because you're not accountants. I'm not trying to make you an accountant. I'm trying to help you grow your business. Where can I improve my operations? Am I meeting my goals? That's help you track. Better cash flow management. Can I be a victim of fraud? I had a client once. I'm gonna put this up on what I do. I'm an outsourced CFO, business consultant. I take care of monthly, quarterly, and annual taxes. I do financial preparations, and I do workshops and training. And most of my workshops are about accounting topics, and I help nonprofits as well. That is my information if you ever want to reach me. But I'm gonna tell y'all this one fraud story, and I'm done. I had a client who just sold they had a make-ready business for apartments. They sold that business for $1.3 million. He did all that stuff I was talking about, but he was a victim of fraud. And at the time, by the time they found out about the fraud, he did not have strong policies and procedures till he met me. They weren't paying attention to their numbers and all of that stuff. When they found out about the fraud, the person that was stealing the money, who was their really close friend, had been stole $350,000 out of their business. You have to keep track of the stuff. There is no way you can run a successful business if you do not know what's going on. And if you're trying to do everything yourself, you're gonna miss some stuff. Fraud doesn't always come, that was a fraud that came within the business. I have stories about how fraud happened at the bank. Fraud happened for a vendor making a mistake. So you have to, things that you're not specialist at, this is not your cup of tea. So it's not just accounting, it's marketing, lawyers. You know, you have to trust that with somebody else so that you can be the CEO of your business and run your business properly. Once again, I'm Verenia Hatch, Hatch and Associates. Thank you for your time and your conversation. This was great.
Right, so
Okay,
now
now
we
we
get-
go into this
now we
icebreaker.
get- We're not gonna, hold on, we're not there yet. There's questions down, we still got some more for you, we got some other gifts and things. So hold on a second. So, thank you for your time, but you got homework.
This way.
All right, so let's talk about these next steps to give you. You open a business checking account, okay? All right, you find an accounting software page.
Now, I want to speak to the accounting software package. You have, I know everyone knows about QuickBooks, Intuit and QuickBooks. They have cornered the market. They have done great things, but let me let you know right now, QuickBooks is not the program, only program out there. There's Wave, Zero,
Yeah.
Zoho,
So,
FreshBooks. You want to find an accounting software package that works for your business. Most bookkeepers and accountants you find will work with QuickBooks. But that's because they generally give it to us for free. But let's say you come to me and I don't have, and you don't have QuickBooks, we'll figure it out. And most people who want your business will do that.
you get a financial service professional, okay? And write down, I know you said that, and write down your, and all of y'all, write down your policies, your processes, and your procedures. This is your to-go work. Now, you start where you at and you keep it moving up. Okay, so all of these need to be things we all have, but we meet you where you are, even on the phone, on Zoom. We meet you where you are, but you need to make sure you have these things. But this was just an introductory. That's why this was called Accounting 101, just to give you the basics. And all of y'all seem like y'all at different levels. So we understand that. That being said, the reason we do this is because this is funded by our grant. That's why I took all your info when you came in, Social Security number, weight, height, and all that kind of stuff. And that's because there's a group, Dallas College in partnership with the Dallas Collaborative on Equitable Development. And they want these things to keep going. So we have been putting these on twice a month. Those are all the ones that y'all have missed. We have gone through some things that were specific for trucking and restaurants. We talked about using the media for your business. That's that lady, she might look familiar, getting set up for success, which is all about different software and things you can use for the low that get you where you need to go. All right. And then on Tuesday, we had sales and customer service, about how to bring up your sales through your service levels. Tonight, you obviously saw this young lady getting to know your numbers, but we got 2 more of these next month and 2 more the month after that. Don't worry, I'm gonna show you how you can get all this information. All right, so next month, we're gonna have Online Marketing Matters, because why? Y'all got here because y'all saw something online, am I right? Other people can see it too. And what they need to see needs to be brand specific. You need to stay on brand. Most people don't understand how important their brand is to them. She's gonna talk about that. Then the gentleman who was in here earlier, okay, he's gonna be back to talk about budget or bust. Making sure that your money is where it needs to be so that you don't end up on the wrong side of the tracks. And then this last one, she's gonna come in and she's gonna talk about keeping your money and saving some hassle with tax strategies, right? You heard her saying how important that tax professional is. So I expect to see all of y'all back on Tuesday, November 15th, same time, same place, to learn how to keep more of your money in your pocket. Now, that being said, there are ways to keep you guys supported. This first one is how you get to register for all these programs. They're none listed right now because I only put them up so many days in advance because we literally can only list so many people come because I can't fit up in the space. You know what I mean? But we want y'all to come back. But what I need you guys to do, and I'm gonna tell you that in a second, I want you to visit both of these because all of her contact information, as well as a copy of the recording from tonight, as well as how you register for everything going forward is in this first one called Linktree / Speaker Series. All right. This second one is a bigger group because not only do we have these one and done, so to speak, speaker series programs, but we also have other supports like boot camps where you can learn how to set up your business structure properly. Ma'am, I think that might be a great one for you. We've also got some work ready youth that will try to figure out how we can get your business started. We've got one-on-one business coaching. There are a bunch of different options and they're both of these start off with Linktree, link.tree. See how there's a space, a dot between the R and E? GC Small Biz. That has all of our programs. If you go there, it'll take you to our simple program, which is Linktree for the speaker series. So there is something I need y'all to do. And then I've got 2 follow-up activities. I need you guys to scan that. Can you scan that QR code? When y'all got your phone, I need you guys to take a survey and tell us how we did today. You're gonna rate everything from the room, the location, the food, and the speaker. But if you would please, and I can bring your phone up here and scan it if you can't scan it from where you sit.
Which one?
All right, the first one, Linktree speaker series. Go down to where, you know what, I might need to activate the survey. It might not even be on there yet. Go to the link. Because I don't do stuff early because folks is being there messing with stuff. But go to that particular one, and it'll take me for 2 seconds to switch the topics.
So those are on.
The Linktree is gonna work. This presentation, I raised it up to the very top of the Linktree, so you're gonna actually see it right when you go in. No, but I want you to go to the survey. So in 2 seconds, you're gonna see a survey pop up. All right, I'm gonna move. No, you got the presentation. I'm gonna move it down to presentation. So let me refresh my screen. When I do it, it's gonna pop up under yours. So it's loading. Right now, you should see under, scroll down a little bit, and you should see where it says post survey. I just need you guys to click on it. It's gonna be under presentations, and you're gonna see where it says post survey, know your numbers. Y'all see that? It loads it. It's time I create a QR code. You shouldn't have to go to the camera.
I did, and then
You wanna walk up there with your phone? All right, online. I can't put it in the chat, but if you guys online can go to Linktree, linktr.ee/speaker series, and please complete the post survey. I'm gonna stop this recording, but you guys are welcome to stay on and give us your questions and everything else that you may have, because we don't want to leave you guys